Before we start, you can now join my free buy and sell signals via Telegram. Join the group via the link below this video. Hi everybody, in this video I will show you guys a scalping trading strategy you can use to make profits in crypto, stocks, or forex. This strategy is highly efficient and simple at the same time, so even a beginner can use it to make profits. It consists of only 2 technical indicators and a smart money management approach that aims to maximize the profits on every single trade you take. I will explain the strategy and the indicators in detail, and we'll also go through some false signals and learn how you can stay away from them. Before we start, nothing in this video is financial advice. It's all for informational purposes only. So without further ado, let's get into it. So I'm in TradingView.com, and I'll be using time frame of 15 minutes and regular candles for this strategy. This strategy works well on multiple time frames. You can even use it on a 5-minute chart. Now that our chart is set, we'll add our indicators to the chart. So click on an Indicators tab and search for the first indicator, which is called Triangular Momentum Oscillator. Select this one by Lux Algo. And for the second indicator, you need to search for Adjustable Moving Average. It's going to be this one by Lux Algo as well. Now we'll change some settings for the Adjustable Moving Average indicator. Let's double-click on the Adjustable MA, and in the Input section, enable the Smooth Candles and click OK. Make sure that in the settings for the Triangular Momentum Oscillator, in the Input section, the length should be 7. Now our indicators are set, so let's understand how these indicators work. First, let's start with the TMO of the Triangular Moving Average. This is going to be our main confirmation indicator. Based on its signals, we're going to be placing buy and sell orders. The following oscillator is based on the momentum of a triangular moving average, hence the name triangular momentum. Because of the very smooth property of the triangular moving average, this indicator is used to detect divergences. These divergences detected by the oscillator are regular divergences where the oscillator leads price variations. A bullish divergence occurs when the price action is making lower lows, but the indicator is making higher lows. Once such divergence has been identified, the indicator issues a buy signal, and for a bearish divergence, the price action is making higher highs and the oscillator is making lower highs. Once a bearish divergence has been identified, the indicator issues a sell signal. This indicator can also be used without divergences. Basically, when the indicator turns from green to red, this is a signal to go short and vice versa for buy positions. However, I don't think this is the best way of using it because the indicator is lagging. Now let's understand how this adjustable moving average works. The following indicator puts more emphasis on its alternating extremities. An upper extremity will be shown once the high price crosses the upper extremity, while a low extremity will be shown once the low price crosses the lower extremity. Generally speaking, when the price action is in the uptrend, indicator gives us a green line, and also the smooth candles will be increasing in value. On the other hand, when the price action is in a downtrend, this indicator gives us a red line and the smooth candles are usually decreasing in value. It's very easy to spot a ranging market with this indicator. Notice when the volume in the market is low, the smooth candles are barely seen, and so it's very important for us to keep an eye on these candles because they can eliminate a lot of potential losing trades. Now that you know how these indicators work in our strategy, let's now understand the rules for our trading strategy. So here are the rules for entering a buy trade. Number 1, we need to have a new buy signal issued by the Triangular Momentum Oscillator, like this one. Number 2, the upper extremity must be present on the adjustable MA indicator, as we already know this green line confirms the uptrend. Number 3, these smooth candles should increase in value. Here we can see that the candles started increasing in value, so we're going to go ahead and place a buy position at the close of this candlestick. The stop loss will be set at the recent swing low for this strategy. We're not going to set a specific take profit target. You're basically going to exit a winning long trade either when the oscillator issues a new sell signal, or as soon as the lower extremity, which is the red line, appears on the chart. As we can see, the red line appeared on the chart here, and the trade is running in profit, so this would be a valid signal for us to exit the trade. And you can see this trade would have ended in a profit. If, for example, the oscillator issues a new buy signal, but the moving average is red color, the signal automatically becomes invalid, so we'll stay away from these trades. Now let's go through the rules for entering a sell trade for this strategy, which are exactly opposite of the buy trade. First, the oscillator must issue a signal to sell, like this one. Second, the moving average must be red color, like it is here. Then you want the smooth candlesticks to be decreasing in value, as we can see the candlesticks started decreasing here. As all the rules are confirmed, I'll get in this trade right here. The stop loss will be set at the recent swing high, and we're going to exit a winning trade either when the oscillator issues a new buy signal, or as soon as the moving average turns green. So in our case, we'll exit the trade here, and this also would have been a successful trade. You can easily stay away from false signals if you be patient and follow the rules. For example, you can see here, we got a sell signal, but the moving average is not red, so we'll not get into this trade. Now I'll show one more example for buy and sell trade so that you guys can understand this strategy better. Here we have a buy signal, the moving average line is green and the smoothing candles increased in value here. So I'll get in this trade right here, keep the stop loss at the recent swing low for a buy trade and exit right here as the MA line turned red here, and this would have been a good profitable buy trade. Here you can see the moving average line is red, the oscillator gives a sell signal, and the candles decrease in value here. So you'll get in at the close of this candle, put your stop loss at the recent swing high, and exit the trade whenever the oscillator gives a buy signal or the MA line turns green, which will be right here. In our case, so again, a successful trade. I found this strategy to be pretty decent scalping strategy, but make sure to backtest this strategy yourself so that you can understand the potential of this strategy better. If you don't want to analyze yourself, you can also join my free Telegram group where I tell you for free when I will open a buy or sell position. That's it for the strategy. If you liked the video, make sure to hit the like button, subscribe to my channel, and hit the bell. Thanks for watching, and I'll see you in the next one.